Hey YouTube, today I want to walk you through my dividend growth portfolio as I am on my journey to retire early and live life on my own terms. Now, I'm creating this video because some of you may be wanting to live that life of freedom and don't know how to achieve it yet. Well, I want to give you that roadmap from starting from scratch so you know exactly what to do step by step to reach FIRE, and it's going to be relatable. I am not starting off with $100,000 and saying, hey, catch up. I am right there with y'all. So if you're just starting out as a college grad, or maybe you're late to the game as I was, I want to inspire you to take action and start your investing journey. So let me stop yapping and let's jump right into the portfolio. So as you can see, I have $3,400 invested so far, and this is just from a little over a year of investing. I've been contributing about $165 a month in the portfolio, and as you can see on the week, I'm up around 1%. On the month, let's see how much I am up. About 4%, so a little bounce back from the tariffs that we had earlier this year. So as far as like the allocation that I put into the portfolio, I invest 20% in growth stocks, 70% in dividend growth stocks, and 10% I keep in cash. And my goal is within the next 10 years to reach $1,024,000. And that's why you see that weird number in the title. That's a number I came up with personally that works for me to retire early with. That number may be a little bit different for y'all, but do you think I can do it? Let's see. But without further ado, let's jump into the first stock, which is Chipotle. One share of this. And I just personally love Chipotle food. I love the fundamentals of this company. I'm sitting at $55.92 right now. Next company is Robinhood, and I'm a huge fan of Robinhood. Obviously, as you can see, I'm recording a video on the app itself, but in the fall, they're coming out with banking services, and this is when I really think this stock is going to start to take off and become one of the best fintech investments out there currently. Next, we have, I believe it's called Nvidia, something like that. Right now, this is one of my best performing stocks. It's a very popular stock. Let's jump into here, as you can see. And right now I am up 20%. I just bought this stock about a month ago. So as you can see, huge returns so far. And if you're curious about the way that I buy growth stocks, it's a little bit different from the way that I buy my dividend stocks. With dividend stocks, it's completely systematic. It's completely based on the numbers. With growth stocks, it's a little bit more of a feel and products that I use every single day. So the next couple of investments are no-brainers for me. The next one we have down here is Google. One share, as you can see, it's $181. It's a bit down from where I originally purchased it, but it's Google. I'm sure it'll get back to where it was previously. Company after that is Amazon at one share at $224, up 1% so far since I've bought it. Obviously, great quality stock, e-commerce. So before we move on to the dividend part of the portfolio, if you guys have any questions about dividend growth investing or my investing journey so far, leave a comment in the section below and I will respond to as many people as I can. I want to create one of the best communities out there for beginning investors and just, help each other out. And as far as dividends, I have 10% in ETFs and the rest in individual stocks. Now, I know there's a lot of so-called dividend growth investors out there who only invest in ETFs, but realize there's a difference between dividend investing and dividend growth investing. So I do dividend growth investing, which means I want dividends that increase at least 5 to 10% every single year. ETFs don't increase their dividends. They track the market performance, and their yield is pretty much the same across the board. So that's why I only invest 10% in ETFs, and eventually I'll sell those off and put them into individual stocks. But for now, I'm keeping the 10%, and we're starting off with SCHD. This is a Schwab dividend fund right here. It's a low entry for beginning investors who want to get their feet wet with ETFs. Low expense ratio as well, so it's a very cheap ETF to begin with. Very highly recommended by a lot of YouTubers out there. So I don't see anything wrong with that. We have next SPHD, which is a low volatility fund that tracks the S&P 500. This one actually pays monthly dividends, so I'm really excited about this one. Bringing in monthly checks is one of the goals, but it shouldn't be something that you strive for. You want to make sure it hits your fundamentals. This one has a bit of a higher expense ratio than the Schwab fund, but I like it so far. Again, another low price point for beginning investors to get into, and you get to see immediate benefits as soon as you invest in this, because it's a monthly dividend payer. Next, we have a Vanguard ETF. This is also a dividend ETF by Vanguard. This one has been performing really well for me. It's been up, I believe. Let's take a look. This one's up 16%, almost 17% so far since I've bought it. So one of the better performing ETFs that I have in my portfolio. And I definitely want to hold this one for the long term. Next, we go into the individual stocks in the portfolio, starting off with the financial sector. And we have Prudential. It's down a little bit, but this is one of my favorite dividend growth stocks. They've increased their dividend a lot over the past couple years, anywhere between 5 to 10%, which is what we're looking for, and just a good quality financial stock overall. Next, we're going into consumer cyclical with Best Buy. We have here a lot of companies have been down from what I've noticed ever since the tariffs were announced earlier this year. But Best Buy is still, in my opinion, high dividend yield here, over 4%. So that's what we're looking for. Then we have Carter. This one has been a bit of a disappointment for me. They sell baby clothes. If you're familiar with the Carter's outlet stores that they have. This one recently cut their dividend from 80 cents all the way down to 25 cents. So I have to consider whether I want to keep it or if I want to get rid of it and try to recoup my losses that way. But I don't know. I haven't decided yet, but definitely disappointed with Carter. So you can't always trust the fundamentals, because this one had a low PE ratio, low payout ratio. So I thought the dividend was safe. Unfortunately, it wasn't. So trust your gut too as well. Don't always trust the numbers. Next, we have one of the better performing stocks in the portfolio, and that is EVRG, which is a utility company. Let's jump into this one, and I'll show you why this is one of the better performing stocks that I have. Obviously, you can see there's great appreciation here, 21% up, 21% ever since I bought it. But also the dividend is above 4%, and they've raised their dividend for the past couple of years too as well. So think of it just like real estate. You're getting appreciation, you're getting a payout with a check, and the check is also increasing every single year. So that is the power of dividend growth investing. You get the same benefits of real estate without all the headaches and without all the management and having to invest a whole bunch of capital up front. So just want to show you guys the power of dividend growth investing with this particular stock. Next, we are going to go into real estate investment trust, and I have 3 shares of VICI. I really like this one because as far as REITs, this one has a low payout ratio. If you're familiar with REITs, they have to pay out around 90% back to the shareholders, but this one has a very low payout ratio and a high dividend yield. So I'm really thinking of holding this one long term. They invest in things like casinos, gaming, a bunch of different real estate investments that they're in. So I like this one, and I'm going to hold it for a long time. Next, we jump into telecommunication stocks. So we have Comcast. This one's down a bit. Don't know if I want to keep or hold this one for a long time. Might get rid of it. After that, we have Verizon. 2 shares of Verizon at $41. This one's also down a bit. Verizon's a well-known company and it has an extremely high dividend yield, so I'm thinking of holding this one for a long time. Next one we have is Sirius. So Sirius XM radio. This one I only bought because Warren Buffett bought a whole bunch of these stocks earlier in the year, and he usually knows things that we don't know as investors. So bought this. Also has a dividend of 4.5%, so I thought it was a good play, especially for the price point. Next we are going to go into consumer defensive stocks. So first we have Archer Daniel Midlands. This one also has been down for me. It's a good solid stock. I believe they're a dividend aristocrat or a dividend king. They've definitely raised their dividend over a long period of time. So I'm just holding it, seeing how it plays out. Next one we have is General Mills, and this is a company that I recently bought. Not sure how I feel about it yet. We'll just hold on to it, see how it plays out over time. The next one's a very familiar brand. This is Target. TGT, 1 share of Target, $104. This one's also down a little bit since I've bought it. But again, I got it at a high dividend yield, which is what we're investing here. We're not really investing for appreciation. If we get it, cool, but we are investing for dividend growth here. And it had a high yield at the time that I purchased it, 4%. So we're going to stick with it. Next, we have technology companies. And first one I'm starting out with is Hewlett Packard, the chip maker. 1 share, $25. Next one is a huge one for me. This is Texas Instruments. As you can see, this one is also up huge for me. Almost 20% it's been up, and it's very hard to find dividend growth in tech stocks, but this one I believe has a dividend yield of about 3%. Yep, so as you can see it, dividend yield about 3%. When I bought it initially, right now it's at 2.43%. But yeah, I'm thinking of holding this one for the long time. I'm getting appreciation and dividends, and I'm sure they're going to grow their dividend at a huge rate. So this one's one of the better tech stocks that I could find. Next, we're going to go into industrials. And for industrials, we have UPS, very popular brand here. When I bought it, it was at a high dividend yield, I believe 5%. So I have 2 shares of those, and they pay me a huge amount monthly. Next, we are going into energy stocks, and we have a very popular one here, Chevron. This one's also been one of the better performing stocks for me in my portfolio, up about 7%. It also has a dividend yield of about 4.5%, and they've raised their dividend about 5 to 10% every single year. So definitely holding on to this one for the long term. Next, we have basic materials and chemicals, and we have Eastman. Not too familiar with what they do. I've been doing a little bit of research on it, but I want a little bit of diversification in my portfolio with chemical companies. This one pays a dividend of about 3.8% currently when I bought it. So I'm going to hold it for the long term, see how that plays out. And the last stock in the portfolio in the healthcare sector is Merck. Now, I used to be a huge fan of AbbVie. When I had AbbVie in my portfolio, it definitely went up a lot, but I got scared because the payout ratio was so high on AbbVie and they have a lot of debt on their books. So I decided to take the gains and invest it into 2 shares of Merck. Now this one has a lower payout ratio. I believe the dividend is going to be safer and is going to be having the potential to grow a little bit more than AbbVie. Who knows? I could be wrong about that, but we'll see how that plays out in the future. So, as you guys can see, that is my investing portfolio. It's only been a year, so we'll see how this plays out. And if you love this video and are inspired to start your dividend growth investing journey, but don't have a brokerage yet, I highly recommend Robinhood. If you use the link in my description section below, you get a free stock on me. I also get one as well, so we both win. So with that being said, my name is Mal, and on my channel, you'll learn dividend growth investing and how to retire early. So If you enjoyed my content, hit that like button, subscribe before you go, and as always, look out for my next video where I show you how much I actually got paid from these dividends.